presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Phil in Puerto Rico. Hey, Phil, what's going on?
Hey, Tom, doing great. Just wanted to thank you guys and the whole crew. Best content on the internet. Really appreciate everything you guys are doing.
We appreciate you growling and prowling with us out here. Phil, how did you find us?
I just typed in live trading in YouTube one morning.
Cool.
I was looking for any type of live trading room. You guys came up, and
Awesome.
I know quality when I see it, or at least I like to think so. And I mean, you guys are just a dream. I appreciate everything you guys do.
Welcome to the Tiger family. We appreciate you growling and prowling with us.
My pleasure.
Now, Tom O'Brien.
Welcome, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. We are going to do it a little bit like the ancestors today. We're getting our AC repaired, and it is hot. It is hot with the windows open, so I'm sorry if you hear the bamboo rattling, but it's beautiful. This show is definitely dedicated to the settlers and natives of Florida who were in this land before air conditioning. I'm not built for this kind of heat, so that's very fun. Speaking of heat, the market is heating up as well. Man, in the face of CPI, you kind of bounced back a little bit yesterday, at least from the trade down in the in the morning, and then we're moving down PPI numbers. I mean, you're up 0.96% at 609.15 right now in the composite, trading up 1.32%. Excuse me, that was in the SPY. In the composite, you're trading up 1.31% at 19,908. You have the Dow Jones Industrial up about 0.77% at 44,711. Look at the Russell right there, okay? Up 0.95%. These are the futures at 2,284. You got the dollar trading off about 0.45% at 107.28. Of course, you have T-bills going up. You know, there has been so much conversation, really comments by Elon Musk and some posturing from some of the larger hedge funds getting in, definitely to short-dated notes, but the 10-year as well. I mean, Elon Musk has been saying consistently you're going to have a price increase in the 10-year. You know, we were speaking about that as well. One of the ways that Trump can achieve kind of lower interest rates, which is what he's been talking about. Now, of course, he tried to, I think kind of shoulder check the Fed a little bit. It didn't necessarily work. I don't think the Fed should really do that to save their face. But of course, Trump, if he does, the sovereign wealth fund can buy a ton of 10-year notes, which I think is probably the way that he's thinking about it. Of course, this news cycle is so rapid that kind of conversation goes away for a little bit. You're pretty much flat in crude futures right now, trading at 71.36. Let's see here, the gold contract up 0.84% at 9,953. You got copper, man, that continual march upward at $4.78, trading up 1.6%. Let's see how Southern Copper did on earnings. I believe they had earnings. Okay, so I mean, kind of right on there, but they've recovered quite well from it, at least right now. Okay, not necessarily closing that gap, but you're trading up 2.59% today at 96.70. Let's see what else we got cooking. Celsius, man, this has been, I'd say volatile. It hasn't really been because the movements are pretty similar day to day. I mean, you're down 3% one day, up 3% the next day. Trading up right now 4.32% at $22.20. You got Disney up 0.31% at 109.57. Really, at some certain point, again, you question these kind of streaming services that it's just not really working out for them. I would like to think that it would have been far, far better for them just to really license that out to someone who already had that platform. I'm not sure, again, what the logic was behind that. Of course, this is old news, too. Tesla. What the heck, man? So, I mean, you're down, right, at least from the high of the day. You are trading up totally 5.24% at 354.17. Still, I mean, I think the thesis that we had is still correct. This really should give back the Trump rally. But, again, a lot of times this is divorced from the reality of the numbers and the condition that the market is in. So what are we looking at here? Okay, you had the headline come out that it looks like the U.S. government was going to spend $400 million over 5 years with Tesla to develop armored Tesla vehicles. Okay, this was, it seems, something that Biden was actually working on, and it kind of just gets carried through in the Trump administration. You can go look at kind of those numbers. I think there was around December like 15th or something. Those were released. So this is not some just new contract coming out. Of course, it is news to retail. So, I mean, you have that angle to it. Of course, you've now started to have insane price points for Tesla being thrown out by some of these big analyst firms. I mean, that's the highest I saw was $550, which is pretty wild. Now, I mean, $400 million over 5 years. I mean, it's $80 million in revenue per year. You're talking about a company that's not even speaking about what the margins on that would be. I couldn't imagine that they're very large, because I don't think their margins are very large right now. But it's not necessarily clear. You know, $80 million each year for 5 years in a $1.1 trillion company, you know, PE of 173. I mean, that is, I mean, yeah, of course it's something. Don't get me wrong. And, you know, I think the argument for this is like, well, it opens up the door for more contracts. And I think that's a gamble. I don't think that's a given. The longer that I see these kind of two interact, and again, this isn't part of the whole, buying puts against Tesla. But again, I just, part of me feels like their relationship, Musk and Trump, these are some, big ego guys, right? And that inevitably leads to smashing of heads. Now, let's say, hey, I hope for the sake of our country that doesn't occur, right? And they work it out, and I'm not, just some rampant hater on things like this. But that's a risk I think exists. So anyways, Tesla up 5.26%. I mean, I think probably at this point, I wouldn't say, keep trying to bet for it going down. I still think it probably should. And that was the idea, again, of having those longer kind of contracts, like expiration dates, right? Going into May, mainly because, you run the risk of days like this, right? Where it really kind of comes back up. I mean, if we take this out on the yearly, I mean, yes, this is definitely a recovery, right? And I mean, you had that low in the 320s. That was definitely a pretty strong, especially that day as well, was pretty strong resistance. And, you're back up. You had decent volume yesterday. It really gave up a lot of its gains, still closed green, but gave up a ton of gains at the end of the day. You had the news last night of 400 million. It's massive. People are now speculating. You had Tim Cook tweet something, or X something, whatever that is now, saying, we're about to welcome something new to the family, right? And Elon Musk retweeted it. And that doesn't really mean anything at all. But of course, this market is always looking for signs. Many of this SPX trading right now, 6,110. Wow. Resilient market, no doubt. It really is. So anyways, point on Tesla right now is I would not take any kind of, for myself, new position in that. Take a look at Roku, up 1.65%. They have earnings coming up. Man, we'll talk about some earnings. Of course, we're going to have Tim Ord on today as well. But man, Hood, check it out. Good thing we got in there right at the end. Trading up 14.31%. This is dominant. Folks, be right there. Or stay right there. We'll be right back with Tim Ord.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. Jacob Shoup, you're watching the Tom O'Brien Show. Yeah, that's talking in the den some more. Not shorting for sure. Definitely agree. Anytime, I'm like, you want something like that, I always listen to The Gambler by Kenny Rogers. Really works out for sure. Take a look at Hood right now. Man, if you liked Hood, I think you're going to like Coinbase as well. You add a bunch of new people. Of course, they broke into the market in the UK, which I think was phenomenal. Again, I'm curious to see how Hood can really develop, that they can become definitely a full-fledged financial company for young people. Of course, you've had things like SoFi try to do this as well. Now, a lot of what happened with Robinhood is going to be the big attention put on cryptos, right? So that was massive for Robinhood. Listen, this is something that I was just kind of playing earnings on, and I didn't get options. I just bought some equity and stuff like that and just kind of held on to it. I am going to hold on to Robinhood. I actually don't want to take profits right now. It doesn't make any sense to me. If we get any kind of pullback on Robinhood, I might even add more, honestly. I really like this equity. I think those numbers were extremely solid. We can take a look, of course, a little bit about that. And then, of course, you have Coin coming up with earnings. We're going to talk a little bit more about this. Again, now, these are competitors. Hold that thought. We're going to talk some more about this. Of course, it is Thursday, so you all know what that means. We are going to go over right now to ord-oracle.com. Now, we are joined every Tuesday and Thursday on the Tom O'Brien Show by Tim Ord of the Ord Oracle. You can check out his website. That is ord-oracle.com, and check out his newsletter. Check out his book that he has. And then additionally, you go over to TFNN.com. In the services tab, we have two fantastic webinars from Tim Ord. That is the secret science of market tops. And as I've been saying, there's been a lot of toppy behavior in this market. Is it true? Well, I would recommend checking out this webinar and seeing for yourself. Additionally, we have 6 secret ratios every trader should know, which I think are fantastic. This is the crux of how Tim Ord looks at some stuff. Tim, how are you doing?
Good. So I sold my long position yesterday. I wish I waited another day.
Yeah.
Things are getting a little, tops take longer to form, and they're a little bit harder to catch. Bottoms are usually, they're gone in a heartbeat.
Sure.
Everything tries to get to the exit door at the same time. That's your key to get long. But tops sometimes can take several weeks to form, and I think that's what's going on here. But we did sell our long position yesterday, made a modest profit. But first chart we're going to go over is the ARMS index. Matter of fact, we're going to look at several different ARMS type things. But anyhow, the bottom window is the 3-day ARMS. Next window up is the 2-day ARMS. Next window up is the 5-day ARMS. and the top window is the 10-day arms. 10-day arms is obviously the most important. It takes 2 weeks of data and really is kind of a key indicator to determine really highs and lows. But it never did get to the bullish area of 1.2 on this last low. I did get along anyway, just because I had some other indicators saying so. But what's happening now, if you go back down to the bottom window, you got 3-day arms right now at 0.85. You like to see it up around 1.2. So the 3-day arms is not near bullish levels. Next one's a 2-day arms, kind of a similar reading, coming in 0.82. And the next higher window is a 5-day arms is 0.87. And the top one's 1.1. That's not too bad, but you got awful low readings on the arms index of those 4 moving averages. It's not like flashing the sell signal here or anything, but it does suggest that the rally won't go far. You really want to see actually the arms stay high as the market goes forward. And I listed the 10-day arms noted in pink areas, shaded areas, where it got to 1.2 or higher. And you can see most of the times it came at bottoms, worthwhile bottoms, even sometimes back in 2024, early January 24, market was rallying and the arms was going up same time. That's the most bullish combination you could have. Here we kind of have at best middling, so nothing real shattering. Then we showed this chart before. Go to chart 2.
Yep.
And this is 100-day arms. Let me pull up something here real quick. Yeah, this is a 100-day arm. That's the bottom window, and the top window is actually the NYSE. But anyhow, the 100-day arms, it gets around 1.1 or lower, and I mark those times with vertical lines, some blue, some red. But every time it got down there 8 times going back to 2010. So it's pretty rare. It happens about once every 2 years. And of those 8 times it got down to 1.0 or lower, 6 of those times were at major highs. And we had that coming in basically late. It's actually still below 1 right now. It's 0.99. So it's been staying low for the last, it got below 0.1, I think, back in December. Market went down a little bit, came right back up. And we're still below 1. So the 2, the 3, the 5, and the 10-day trend at best is middling. And you got the 100-day trend, which is outright bearish. So the market's kind of adjusting here, even though we're up today about a point or up 1%. Yeah. If you look at, we'll go through the charts here first. And this is another chart, the 3-day. Or it's not the 3-day, but next chart, number 3, is the SPY VIX ratio. And that's also flashing a bearish sign where the S&P's made higher highs. If you notice, if you look over to the right window there, kind of blew up the where we currently are. And in January, we closed actually at a new high, and we actually hit a new high, and the VIX made a lower high. Can we go up and test the January high? That's a possibility, may or may not happen. But anyhow, if the SPX VIX ratio makes a higher high along with the S&Ps, that's usually a bullish confirmation that the market's going to go higher. And we're not having that. We're not having that right now, as the S&Ps are basically setting at right now, actually on a closing basis, at a new high. And the SPX ratio is not even near a new high. And I noted previous times when the S&Ps made higher highs and that ratio made lower highs, and all of them came at significant tops. So this is another reason to kind of worry, not to chase the market, I guess you might say. So this is another divergence, not ideal. Yep. If you look on the short-term basis here, chart number 4, the second window up from the bottoms of VIX. And the VIX has been extremely narrow over the last about a month or close to a month, at least several weeks, or at least couple of weeks here at least. And I point to the time in mid-December where the same thing happened. You had really kind of narrow range VIX, kind of similar to what we're having now. If you notice, the Bollinger Bands are squeezing together. When the Bollinger Bands squeeze together, it implies the volatility is going to increase on the VIX. Well, the only way the volatility will increase on the VIX, that happens usually when the VIX goes up. Well, the VIX goes up, that means the market goes down. Anyhow, something to watch. We're heading to it.
Some foreboding indicators here. Tim, please stay right there. Folks, we'll be right back with Tim Ward right after this break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The events for this month are February 14th and 21st, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. I'm joined right now by Tim Ord of the Ord Oracle. Of course, this is Jacob Shoup, and you're watching the Tom O'Brien Show. So, Tim, kind of to summarize some of the charts, at least with the broad market, you know, Definitely nothing extremely bullish. Definitely nothing bullish at all. Maybe somewhat bearish you're kind of looking at with it?
Yeah, actually, we're actually, if you can identify the January 31st high, which is on this chart, that would be kind of we had a bearish engulfing pattern about a week ago.
Yeah.
A week before that, we had another bearish engulfing pattern, which is basically January 31st.
Uh-huh.
And anyhow, if you go back to January 31st and compare that volume where you are right now, because we're almost touching that high. And if you touch that high on 10% lighter volume, that implies that previous high will be resistance. And we got volume on that January 31st high of around 95 million. And we're coming in about 25 million, 26 million. True, we got about a half hour to go in the market, but there's no way we're probably going to accumulate another 70 million shares between now and the close. So I thought that might happen. I thought we might touch those previous highs, and here we are we're actually in the process attempting to do it right now. But I'm thinking probably today's going to be a high day. The trend's not ideal here. We're coming in, looks like about 1.35. That actually leans a little bit bullish, but we'll see what tomorrow brings. But we're probably making a high in this vicinity. That's how I'm thinking. That's the reason why I kind of over earlier in the week, I thought at minimum we'll rally to new highs, and we're probably going to do that. But these new highs are probably going to be some sort of a high or some sort of a top. I don't have the confirmation yet to actually say it's going to be a sell signal. I'll have to wait to do my analysis tonight. But and on the bigger time frame, it leans bearish. On the short-term time frames, it's okay so far. So, but I still think that if you can't break a previous high and higher volume, which is what's going to happen today, then that's usually the first sign of a bearish setup.
I see.
So I'll put it that way. So
okay.
Okay, let's move on to the gold market, see where that is.
Absolutely.
Chart number 5. Gotta keep showing this chart. You got to keep reminding people that the bigger trend is up, long as this monthly chart remains on a buy signal, which is the bottom window is a monthly cumulative up-down volume. Next window higher is a cumulative advanced decline. And I put a Bollinger Band on it. Along those two indicators stay above the mid-Bollinger Band, the uptrend's intact. You can have a multi-week consolidation when that happens, even sometimes longer. But in general, this market's going to keep making higher highs over the longer term. Signals of this type on this monthly chart are anywhere from a year and a half to 3 or 4 years. I forgot what it was. So at a minimum, if it's just minimum of a year and a half, that takes this bicycle into November of this year at a minimum. But it could go, another couple of years after. I'm thinking this is probably going to be a couple of years after. So I think this will be a multi-year rally. Kind of look at the shorter term trend. That's the bigger trend, which is the monthly chart. Second, number 6 chart is the it's a shorter term chart. It's a pretty simple method. If the bottom window is a daily GDX, next window up is the daily cumulative advanced decline. Next window up is the cumulative up down volume, and the top window is just the GDX. And I got a Bollinger Band on them. And when you run into the upper Bollinger Band or the lower Bollinger Band, normally the market at least hesitates on a short-term basis, and you need 3 out of the 4 to hit the upper Bollinger Band or the lower Bollinger Band. We got all 4 indicators hitting the upper Bollinger Band. A lot of times that stalls the market.
I see.
So on a short-term basis, we had a heck of a run. We went from basically 34 to 43, I think it was, on GDX. So consolidation's due. The market's just not going to keep going straight up. I wish it would, but it won't. But we're kind of due for consolidation. And you look on chart number 7. This is kind of another chart. I use it for buy and sell signals. And it's the RSI of the inflation-deflation ratio, which is the second window down from the top. The top window is the RSI for that inflation-deflation ratio. And you get up around 70 on this ratio, which we have. A lot of times the market will stall. And so I'm thinking you got two different indicators that are totally unrelated, kind of saying the same thing. So it tells me we're probably going to head into a consolidation here. Nothing real significant. If you look on the bottom window, which is the GDX, it's just a daily GDX, we jumped above a previous high, and that's that red line, a dotted line going across the chart there. Over the recent past, I did the same thing with the XAU and the next window higher. A lot of times you jump above some previous highs and you come back down to them. So on GDX, it'd be around eyeballing, it looks like about 38. On the XAU, it looks like about 160. So we may consolidate down to the previous highs. Nothing real significant. It's a consolidation and an uptrend. But we're due for some sort of a consolidation here. So consolidation is actually build power for the next rally up. So the longer the consolidation, normally the longer the rally. So nothing significant. If you look at chart number, chart number 8, it kind of, this is a different method, but you can see it a little bit better where it comes in. I think we could pull back to, looks like about 39 actually instead of 38. We're at 42. We could possibly pull back there. We got resistance up around 44, which is previous high. You got those both indicators. The bottom window is the 18-day average up down volume, and the next window higher is the 18-day average of the advanced decline. As long as those two indicators stay above -10, the uptrend's intact. And so both those indicators may actually stay above -10, and we pull back to 39. Don't know, but the market internals are real healthy. You got a really up down volume, really in a strong position, and you got advanced decline in a real strong position. So nothing of a top of any consequence, but a multi-week I think is possible here. So, but buy the pullback, that's how I'd say it. And if you're long, you're probably getting long in the tooth. I thought we might go up to 44 and hesitate up there before we pull back, but could pull back here, but nothing significant.
Yeah, and you had that 44.22, I think, high from October. We're looking forward, of course, to you have Agnico Eagle reporting. This is some good stuff, Tim. Tim, thank you so much. Always good having you on. We'll see you Tuesday, okay?
All right, see you again. Thank you for having me on.
Absolutely. Thanks for coming on, Tim. Folks, you said it there right. We'll be right back. Make sure you check out ord-oracle.com to see more from Tim. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. I was just joined by Tim Ord of the Ord Oracle. Strongly recommend checking out his website at ord-oracle.com. You can also take a look at the webinars he has on the Services tab of TFNN. If you decide to go ahead and purchase one of those, well, we're going to give you access. You're going to enjoy it. Really looking forward to that. Coin, okay? Wanted to talk about this a little more. Of course, we got Robinhood right at the end of the day before earnings. Feeling very strongly about that. They really expanded based on, of course, expansion of the UK one, but then also the addition of cryptocurrencies, right? So, I mean, the cryptocurrencies saw just a massive day in the sun after Trump won. Of course, the idea was that his administration would be sympathetic towards cryptocurrency in general. Seems like that might still be the case, but so anyways, my point being is there's two ways to look at this, right? Sorry about that. There are two ways to look about this. Robinhood, of course, would be a competitor with Coinbase in this field, right? So you might say, okay, well, maybe Robinhood took a lot of, people wanting to buy crypto away from Coinbase. But I will say the way that I look at this is actually more of a general expansion in the market itself, right? I mean, we look at... You go to Google Trends, okay? You're taking a look at Coinbase, Robinhood, how to buy Bitcoin, all these kind of different keywords and phrases. With the search interest with Bitcoin, okay, you're getting a surge of, getting some nice airflow through here right now, guys. Getting a surge with Coinbase. Now, that seems to be relatively in tandem with Robinhood search results as well, or search queries rather. But it seems like Coinbase has more people looking into it when you're looking with Bitcoin as well. So I think there's a general just expansion of interest. And I think that Coinbase will benefit from it as well. I think what I'm trying to say is there's enough pie for everybody to share. I am bullish going in to Coinbase's earnings. So how to play that, right? I don't always want to do options right at the time. I think it's just not the way that I like approaching it, and maybe that will change in the future. But you can get Coinbase, maybe hold on to it or something like that. Or I'm looking at ConL. This is basically just an ETF for Coinbase, leveraged ETF. You can see you have a 17.5% to the upside right now versus Coin's, 8.85? Yeah, so it's roughly, it's just 2 times. So that's kind of what I'm looking at on it. Now, something important to keep in mind, at least for Coinbase, is they last few quarters have not done super well on earnings, right? That's actually pretty abysmal if you look at it. I believe that just the general hype with Bitcoin itself and cryptocurrencies itself and all these new people trying to get into it. I have a friend of mine. He is just a general contractor, does a lot of odd jobs, right? Great guy, maybe in his 50s. I'm not exactly sure, but he has a kid who's about late teens. So that's kind of what I'm assuming on it. And he comes up to me recently and he wants me to take a look at his Coinbase account and there's some kind of promo that Coinbase was doing. And it was for every interaction every transaction rather that you performed on Coinbase, and this is for February, and I guess they're doing it 4 times, obviously it's weekly for that. For every transaction you made, you basically threw a lot in a hat for a free Bitcoin, okay? And you can do this up to 10 times per week. That will get you 10 lots. And I thought, man, I wish I were the guy who came up with that at Coinbase because I would be totally chilling right now. And then second, I look at him, and this is a guy who I don't think has, a Roth, any kind of like major savings, and I don't mean that in a negative way at all. It's just I don't think he does, right? And but he's taken money from his paycheck every month and putting it into Coinbase, And I know there are a lot of people who are like that, right? I mean, they maybe don't trust TradFin or anything like that. So, you get to something like DeFi. I mean, not that I would really argue that what we're doing anymore is DeFi with things like Bitcoin. But you're getting a massive expansion in attraction to these kind of assets. So I think that you'll probably have some pretty good numbers and forward guidance for Coinbase. I think that their user base is probably expanded. The stuff in February, I believe might be the first year they're doing this. I mean, that's huge. They take a nice transaction fee from that. I think he bought just 10 USDC, which is kind of what I suggested because, I mean, like, why not, right? And that worked out for him. And so we'll see if he wins a Bitcoin. I don't think he's going to give me any of it, but that's okay because we can still get into these leveraged ETFs for coin. Again, that is ConL. That's from Granite Shares, I believe. You're trading up 9.05%, $299. I mean, I can see this gapping up as well. I usually am not a fan of doing price targets, but just kind of general movements in one way or the other and trying to capture some of that gain. So right now you got Coinbase reporting earnings at, it seems, 5 p.m. Eastern time today. So that'll be interesting to see, trading up 8.97%. Okay, what else do we want to look at? HIMS. Yeah. And it's so funny too. I'm on Twitter and I just kind of stalk around anonymously and just see what's going on and have discussions with people. And it's so funny seeing apparently everyone's always holding these equities, right? When right before it blows up or whatever. HIMS is up 26.10. What I'll say to that is try selling at $31 profit. Then you talk to me, right? You're trading up 26.96% at $58.41. You're at a market cap of $12.2 billion. Okay. Pretty good. I think models like this will probably be the future for getting OTC drugs. Of course, you saw Mark Cuban try to get into that as well. It's very interesting. Now, HIMS ran their big Super Bowl commercial, basically saying, hey, if you take our compounded semaglutide, you're fighting the system that's trying to make you unhealthy. Hey, that is a great way to try to get into touch with young people, right? I mean, I will tell you the general sentiment of a lot of young people. Again, I'm 28, so I would say maybe a few years older than I am, and definitely most people younger than I am believe that there is, I don't know. I think a lot of them believe that there might be some conspiracy to make people unhealthy. I'm not necessarily saying that at all, but I do definitely know that a lot of the food that we have, especially the processed foods, are really not good for us. I mean, one of the big memes that goes around is you go over to Europe and the same, in some analogous product has only 5 ingredients when ours has like 20 or something like that, right? I mean, I think we just banned one of the red dyes. That stuff doesn't float over the pond, So I think they really did quite a good job. These millennial and Gen Z, companies are dominating in a big way, I think a lot of people want semaglutide. They will want these GLP-1 drugs. I think that there might be some problems with them going forward. I think muscle wasting is a massive issue, but you can combat that with essentially SARMs or something along those lines, like they do with patients who have wasting diseases, especially with cancer. And I mean, I think we still kind of run a risk that there's a volatility inherent in this equity right now, especially at these levels, if semaglutide is compounding with semaglutide is really cracked down. Now, of course, you have liraglutide, which is a I can't think of the word. It's not regulated GLP-1, right? It's generic, excuse me. So they could still market off of that, and we'll see. But there's a risk inherent in this. So folks, stay right there. I'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. We just have a short segment left. Take a look at SMCI just to keep you guys updated. Up 6.36% today at $42.22. We have those 37 strikes for February 28th. I think this is where we're going to get basically floor and resistance up until February 25th. I'm still considering buying some puts to kind of, hedge my position here in case they decide not to file for whatever reason. But the more these kind of filings come out, the more it seems like very large companies are, very large funds are adding SMCI. Okay, and then again, not again, I was speaking about this in the den quite a bit, or maybe just a little bit. Wingstop. Sorry, this heat is like just coddling my brain. You have Wingstop, okay? These guys got earnings coming up. I am not confident it should be at this price. I really don't think so. I audibly laughed at 91 PE, okay? A market cap of $9 billion. Their stores, if you do the math, are like, almost double the value of a McDonald's store. The big thing for me is their revenues and net income are growing, but the ratio between the two is not. It's actually staying relatively flat, okay? So, that's fine where you can get the price to keep moving up, but does that warrant a PE of 91? The growth isn't there. Now, what I will ask of some of you guys, if you don't mind, and I was trying to do some more research last night, definitely again with consumer products, I always try to look at trends on some of the big media platforms and on Google as well. You know, I'm a red-blooded American. I just don't really watch the Super Bowl that much. So I was trying to compare to different foods or restaurants that people would buy from during the Super Bowl, right? Obviously, Wingstop is huge. I looked up Domino's. If you guys know anything else or you do something, you're like, Jacob, you're not thinking about this, man. Let me know, please. Regardless, Wingstop did have a massive uptick in searches during the Super Bowl. So, they may be able to report pretty well for that. But the forward guidance is going to be the main thing on Wingstop. I think it might be overvalued at this point. We're going to do a better DD tomorrow on it. So, folks, thank you so much for joining me today. We'll see you tomorrow, 9 a.m. for Tommy O'Brien's Morning Market Kickoff. Take care.
Building wealth